Mairesh Joshi, that's the question to you, right? I mean, we want to discuss Coal India with you first up. An intention to divest 10%, unions opposing it. It's got the usual scheme of how a PSU divestment would happen. What are your thoughts on Coal India as a stock because of all of this?
Morning, Neeraj, I think. So let's assume the scenario that the divestment actually starts coming through over the next 2 weeks. And 10% actually is a huge chunk. So let's assume it comes at a 5% cut for the retail guys. So from the current levels around 310, 315. Now how does it stack up in terms of valuations? Clearly, if you look at the coal grade quantities and the kind of realizations that Coal India has got from FSAs, I think that is clearly around 1800 tons. And e-auction volumes and e-auction realizations probably have come down from that 2500 rupees a ton close to that 1800 rupees a ton. So clearly, I think if you look at washeries where realizations were a lot better, I think offsetting a little bit of the decline that you saw in e-auction prices, you're probably seeing more volumes of coal coming through, which really means that the e-auction realizations will come down. So that's point number one. Point number two, I think the ministry is very, very clear of production numbers actually going up for Coal India at the rate of around 12% on a compounded basis over the next 3 to 5 years. Our own take is that looking at evacuation problems, looking at how the transmission lines specifically in terms of evacuating coal and the 3 railway transmissions line we're talking about, if that gets delayed for some purpose, I think we're just building in estimates of close to 8% on a compounded basis over the next 2 years to say the least. So FY17, our own take in terms of production numbers is close to 575 MT. Clearly, if you look at global prices, the Richard Bay Index, global coal prices have come down meaningfully. And if you look at the high content coal that Coal India produces, I think, yes, there is some amount of disparity in terms of realizations compared to the landed cost of imported coal. But again, I think it's how Coal India increases prices on these high-grade coals and across the different variants of coal. Clearly, even if you look at EBITDA, and in our own estimates, I think we're looking at an EBITDA of close to 23,500 crores for Coal India on an FY17 basis. You give a forward P for an 8 times, and if you exclude the cash component of close to 50,000 odd crores, you're still getting a fair value of around 375, 380, and that's a downgrade from other real estimates 400 to 410. So yes, I think there is a potential upside probably in Coal India, but again, I think it's a long drawn out story. I think the union opposition, how production takes place, how offtake happens. Clearly, I think one really needs to keep a longish view on Coal India if one really needs to take a call on the stock. However, I think if the divestment proceeds do go through, I think it's a big plus for the government. But again, I think retail investors, if the divestment goes through, should subscribe to the issue, because I think it's a qualitative stock that one can probably hold on for the next couple of years.
Mairesh, the other big news, of course, morning firstly, amongst the cabinet decisions which were in slew of sectors, another one was the fact that they've okayed uniform marketing margins for domestic gas supply to urea as well as LPG producers. Break it down for our viewers on which companies really stand to benefit by this decision of the cabinet.
So clearly, I think one component of this entire news piece is the gas suppliers, and the other component probably are the urea and the fertilizer companies who are recipients of gas from these gas suppliers. Now, on the gas supplier side, I think GAIL, IGL are some of the companies that might have some amount of a negative impact. You're already seeing GAIL under a lot of pressure. There is already enough headwinds coming in from the transmission lines, not running up to full capacity. Add to that, I think the new petchem facility that they've put up, clearly the offtake from RasGas at $12 per MMBTU compared to the spot prices of $7 to $8 per MMBTU is clearly not working in favor of GAIL. Again, I think petchem prices are more driven by how polymer demand goes and how the global supply pans out. The gas trading, LPG, liquid hydrocarbons have not done well. So again, I think I was not optimistic on GAIL from a long time. I think add to this news, I think you'll see some amount of it being taken on DPS. IGL, again, I think long drawn out story in terms of how gas supplies will take place, and a similar scenario will pan out for them if marketing margins are coming at the lower end. For the urea and the fertilizer companies, one really needs to understand understand case by case how much gas is probably coming through, what quantum comes through. But in my opinion, again, I think it's more sentimental at this point, because I think it will be a pass-through is what I feel for a lot of these fertilizer guys. And clearly, I think though the cash flows might improve meaningfully over the next few quarters, it's not going to have a meaningful impact on the bottom lines of these companies because of the pass-through effect. So clearly, I think a sentimental effect for fertilizer and urea-based companies, but I think it will not last long. And again, I think you will have a negative hit on the EPS of GAIL and IGL.
Right. Mayuresh, stay with us. Lots more to chat about as we gear up at least for a positive start. Who knows whether that as well gets sold into. Let's get in some more specific stock ideas. Mitesh, I want to come to you for your 8:45 ideas.
I have one sell and a buy call. The sell is an Oracle Finserv, and that's a conditional sell. See, the stock is giving clearly weakish signals on the technical structure. The indicators are turning negative, but the stock is also trading above support levels of 38.60, 38.50. So I think if it starts breaking 38.50 after the opening, maybe in an hour or so, I think this could be a good short call with a stop at 38.92 and look at 37.25 as the first target. I have one buy call on Britannia, which is trading very close to important support levels of 28.20, 28.30. So keep a stop below 2820, and once the market, as the market is showing signs of recovery, the stock can possibly head towards 29.30 as being the first target on the upside.
Sandeep, what about you? Your ideas for the morning at 8:45?
Just selling the Reliance Capital, which gave a breakdown when any bounce back can be sold into with a stop loss of 401, target of 375. A buy in the Marico, I think Mitesh covered that as well. So I would like to have it's a very clear case of a breakout as the up move should continue. Stop loss of 408, target of 444. And a buy in the Asian Paints, which is showing good traction, should see some more upside. Buy it with a stop loss of 810, target of 843.
Okay, let's take a quick break on that note with news that it's holding out for global markets, and the Singapore Nifty as well is indicating a positive start after what looked like an extreme bloodbath on the street yesterday, with us just about defending 7,700 at the day's lows. We come back, talk more stocks.
Back with the market right here on ET Now. Remember, today may be a day which will actually confuse a lot of traders, because we'll open up, gap up, and yesterday a lot of trading in stocks happened on very high open interest on the short side. So actually a very good day to get in Hemant Tukral. He's National Head Derivative Desk at Aditya Birla Money. Joins us right now on the show. Hemant, good having you. Thanks for joining in. How would you approach trade today, Hemant? Because there was some bit of short pile up in individual names yesterday. I can recount at least 10 names out there. But there is a gap up that the market will see today.
Yeah, good morning, Neeraj. See, I think what was not heartening yesterday to see was the way it gave away 77, 50, 78, though these are technical numbers, and today we will open back around that 78 figure. So I have a feeling that yesterday we saw 78 put writers converting into call writers. Now, if we are able to sustain above 78, even if it is 78.10 for say half an hour to 45 minutes, then I think you will see the call writers unwinding their positions and some put writing back coming in 78. Then we can see the push back towards 79, 79.20. And on Nifty, what we are recommending if that stays above 78.10. It's the right time to buy 79 call, which will be available very cheap at that price, and then we expect it to go to 7920. Now, if it fails to sustain above 78 and falls back below 77.80, then I think the writing is on the wall. We will have to test 7680. However, we are not expecting Nifty to remain below 77 in this expiry. So eventually we are expecting expiry to be between 77 to 78 if it doesn't manages to stay above 78.10 today.
Okay, you got a sell on Hexaware, Hemant. Walk us through that strategy.
Yeah, basically what we have seen is that large cap IT was feeling the pressure from last 3 to 4 trading sessions, and yesterday first time that pressure got transferred to Hexaware, a mid cap stock, And not only it has added open interest to the tune of 13% with the falling prices, the volumes on the cash side increased. So clearly a lot of short positions have been built up. Importantly, it has given away some crucial levels on the downside. So what we feel is now 250, 252 will act as a resistance point for it. Yesterday's closing is 242. We expect small gap up, so sell around 245, and we expect it to retest the stronger support band, which is around 232, 234.
Hemant, tell us about your other two strategies as well. Eicher?
Yeah, this stock I have picked up on particularly two reasons. One, first signs of short covering coming in yesterday. Second, stock has been beaten down from in this last 1 month only around 8 to 10%. See, the stock has been penalized more because of its FI holding pattern. A lot of FIs have been offloading this stock for a very long time now. So important is that now around 15,000, it's very long-term support. 14,950, 15,000, it managed to rebound back yesterday. So we are keeping a very tight stop loss here. We are expecting more short covering to come in today. So 15,600 to 15,650, the immediate resistance which it managed to cross yesterday, we feel will act as a support now. And the immediate target in our mind is 16,150, 16,200. But this is backed idea on the basis of short covering. The other mid cap which we are suggesting today for trading is backed by long positions, that is Havels. Again 14% OI added, delivery volumes moved up. So clearly some buying quite visible in Havels. Again technically stock has managed to cross that 248, 250 barrier. So immediate short term it seems that's heading towards that 265, 270 zone. And one can keep a stop loss of around 245, 250.
Right, Hemant, appreciate your time. Thank you for joining us. Mayuresh, if I scan through the preferred mid-cap buy recommendations from Angel, there is a buy on IPCA. And my follow-up question is, I wonder why. Their US FDA problems have not been sorted out. And if I look at their non-US business, it's impressive, but it is not great.
Oh yes, Nikunj, agreed on both those points. And clearly I think the markets have beaten down the stock to a certain extent. I'm not saying that you should go and aggressively buy this stock at the current juncture, wait for appropriate declines for the next 2 to 3 months. But clearly I think the way the formulation sales have been panning up for IPCA, specifically the US formulation sales and the domestic formulation sales, I think they've seen some amount of stability. That's point number one. You're probably seeing some uptick happening on the API side, but again that's a very minuscule portion. It's around 76-77% of their overall top line comes through from the formulation business. Now the entire strategy of the management is to move from the low margin malarial business, specifically on the domestic side, to the high margin CVS, CNS business, which actually fetches them greater margins. And again, I think that improves the kind of top line performance that we're probably talking about. Again, the management is very, very hopeful of looking at EBITDA margins of close to 14 to 15% in the second half of FY16 and some recovery seen in FY17. Add to that, I think if any resolutions come from the FDA plants over the next few quarters, whether that be Ratlam, Indore or Silvassa, clearly that is going to have a big amount of kicker for IPCA Labs, because I think the ROEs should get back to the normalized levels. If you're talking about what we expect in terms of top line growth, we're expecting a 12% growth in terms of sales close to the 3,900 odd mark, and we're probably looking at an EPS of 28 rupees for IPCA. So any correction onto this stock over the next few months I think becomes a good buying opportunity. We feel that FY17 onwards the numbers shall start exhibiting greater strength, and again I think if you're looking at margin expansion, you'll probably see that with the kind of focus that they're having on the high chronic business in India.
The interesting one is Inox Wind. You believe that over the next 2 years they can report a 50% CAGR growth?
Oh yes, Neeraj, and again I think if you look at the recent developments, the new capacity has recently got commissioned in Madhya Pradesh, and that probably adds a lot more in terms of how utilization will go through. Clearly if you look at the order book is at 1.2 gigawatts, we're expecting huge amount of order flows to probably come through with a lot of sites under acquisition for Inox Wind. The government focus on renewable energy, and again I think the management focus of Inox Wind of maintaining their margins at 17.5%, should hold the stock in good stead. So I think our own take is top line growth of 48% over the next couple of years, close to that 5,950 odd mark. If you're probably looking at EBITDA margins, as I said earlier, I think you might see further margin expansion happening if utilization starts improving with the new commissioned facility. And again, I think valuations are not looking too demanding at this point of time. So yes, over the next 2-year time frame, we remain extremely optimistic on Inox Growth.
Stay on, Mayuresh. Lots more to speak about. Very quickly, on to what to watch out from the debt markets as well. Manisha is here with our segment Debt FX.
Thank you so much for that, Neeraj. Well, the impending subject today would be, of course, coming in from the FOMC. The Fed has already said or has reiterated that they are looking to support an early lift-off here. Well, what they also have said that it is going to be not disruptive, it's going to be a smooth transition, and that perhaps has led the uncertainty of the markets here. The data also since the October FOMC meeting has been positive. If you look at the labour market conditions, they have continued to improve. There is an uptick into inflation as well, and that really tells you that the hawkish undertone that the Fed officials have been using really does come in from that. What you really need to watch out for is the divergent monetary policy now between the major central banks. While the US Fed is talking about increasing interest rates, the other central banks, of course, have been cutting it and providing further stimulus. That really means that you could see further strength coming in for the US dollar, already trading at a 7-month highs, and that would also mean that the rupee, in line with the other currencies, can see some pressure, though will be a relative outperformer. Report from the India rating suggests that for this week now you are looking at a range between 65.90 to 66.30. A quick word on the bond market as well. The foreign portfolio then continues to remain negative for the month of November. You have seen outflows coming in for the equity and the debt market as well for this month. Over in the year though, of course, it has been on the supportive side. The bond markets may trade in a range of 7.59 to 7.69 for this week.
Okay, that's the view on the currency markets, but take a look at what special we have for you today. And remember, it is Thursday, so our high price phobia segment. Darshan, tell us what do you have for us today?
Well, Asha, today we analyze TVS Sri Chakra. It's the leader in the 2- and 3-wheeler tyre space. And interestingly, what caught my eyes is that the increasing number of TV ads for TVS tyres. We'll try to analyze more details about the financials and the growth strategy very, very shortly on ET Now.
A lot for that, Darshan. This will be an interesting one. Remember, it's rallied quite a bit. But tyre companies are in demand as well. By the way, today there is some news as well. I think on carbon black there is an anti-dumping duty which will make domestic production of rubber more viable. Could it help some of the tyre companies? That's the key question. Remember, they've been very active the last few days. Bunch of short covering moves in CEAT and MRF. But 30 seconds left for the markets to kickstart trade. What's top of the mind? One, of course, the Fed minutes, and that's led to the market doing what it is. But I think 2 or 3 stocks to watch out for. One of them could be Sun Pharma. From the mid-cap space, I think Religer could be a very, very interesting one. So do watch out for that one as well. Could be a very interesting stock to monitor in trade today. And do watch out for the fertilizer, the urea companies in particular. The marketing margin benefit might lead to a trading rally. At best, it will be a trading rally, I would think. But I think the likes of RCF, Chambal, etc. could well react in the session today. But here are the first trades on the pre-open, and there is a fair bit of green. There will be a fair bit of green on the screen, let me put it that way. 32 odd points up for Nifty. 37 now, the Sensex about 100 odd points, so not a bad start for the markets. What is moving? A lot of beaten down names could just see a bit of a trading bounce today. So Tata Motors, CAN, PNB, BHEL, Maruti Suzuki has 1.25% in the first 1 minute of trade. Telecom could be an interesting mover. Yesterday, Idea and Bharti were the 2 lone rangers on the Nifty and the gaining side. Let's see if they continue in today's session or no. And do watch out for banks. Bank Nifty cracked quite viciously in trade yesterday. Maybe, just maybe, there's a bit of a bounce. Just lastly, I don't know if the trade would have started in the first 1 minute for some of the fertilizer names. They're very small names, but after a long time, they're getting some positive news. So maybe the likes of RCF, Chambal, etc. could be active. Chambal in particular, a very trader-friendly stock. Do watch out for that one.
Sugar, I want to see post the subsidy announcement. While it turned out to be a mixed bag for some of the sugar names, today too, you're seeing some rallies actually stay put for most of the stocks. So Renuka at least has had a positive start for itself. Meantime, you've got Adani Ports, wherein the promoters created a pledge of about almost 1.6 crore shares. So that, of course, is data coming in from 16th November. Aurobindo Pharma, they've sought shareholders okay for issue of securities up to about $600 million. So watch out for what Oro Pharma does in trade today. You've also got couple of other stocks which are going to be in focus. Coal India post the cabinet announcement of a 10% divestment. You are now hearing that unions have been opposing this 10% stake sale in the company, so look out for this. Cairn India, they've cut the capex by a good 40% on account of lower crude prices. Look out for this one as well. And maybe Amtech Auto could be in focus, considering Amtech may get a 6,000 crore rupee from its Tech 4 stake sale. So that is something that the newspapers are indicating this morning. But very quickly, let's also get you a sense of what the dealing room chatter is today. What could be the three important stocks to look out for? Ajay?
Good morning, Aisha. Aisha, multiple conferences happening right now. One of the things which is theme is emerging is both at Citi and CLSA is from the experts that probably the residential real estate market is bottoming out. That's the central theme. And a lot of analysts and traders have started nibbling in already into this sector, which is not very loved right now. But high quality names like Sobha Developers is emerging in my conversations with some of the big guys, indicating that a lot of interest is witnessed in high quality names. The second stock is from the small cap space, but belongs to a large group, Arvind Infra, the demerged arm of Arvind. That is also one stock, which is Arvind Infra is the stock I'm talking about. We understand big HNIs have started accumulating that particular stock. From here on, all the real estate development of the group will happen via this company, and we understand they are entering some pretty meaningful commercial deals in the next couple of months. And the last one is L&T. We have spoken a whole lot about the traditional business, but defense is a new business which is emerging. The management has indicated very positive guidance. In fact, $4 billion worth of orders they are working on very closely. $700 million worth of order, they are already L1 bidders. So the defense opportunity of L&T, according to analysts and dealers, is much more, tangible compared to many other defense stocks which we speak about.
Right, Ajay, thanks a lot for that. Now, what are brokerages betting on? And brokerages are betting on Nomura. Ethan, why Idea?
Clearly, that stock is out of favor, and we have seen generally telecom stocks have not been favored by the markets. If you look at Nomura also today, they have cut the target price on Idea Cellular to a steep 118 rupees from the earlier level of 142. So almost a 15-20% price cut coming in by Nomura on Idea Cellular. Of course, we believe that Reliance Jio launch is something that could shake up the entire telecom sector. In fact, we also had Sunil Mittal talking about that how aggressive Reliance Jio could get in, and that disruption could really be something worrisome for the entire telecom sector as of now. And on the same basis, Nomura also believes that the entry of Reliance Jio would be difficult for various telecom companies, given the fact that most of the growth that these companies saw was in the data services segment. And if that segment is hit by Reliance Jio, the profitability could be something that could be hit in the very medium term. Also, they say that voice prices hike will offset the kind of investments that they have done in the spectrum and 2G and 3G bidding recently. So clearly, interest cost is also something which would keep the earnings quite muted in the coming quarters, and hence most of the brokerages are turning cautious on the entire telecom sector, including Idea Cellular.
Right. Yatin, thanks a lot for that. Now, enough and more has been discussed and debated on what is the fate of telecom. Now, there are some brokerages which have debated and which have argued that data consumption will go up. Raw material for telecom companies is spectrum, which is now secure. And given that 4G services are around the corner, telecom as a group has a long way to go. Mayuresh, the street is divided on what is the way forward for large cap telecom stocks in the short term. So are you with the bulls, or would you like to support the bears?
No, absolutely, Nikunj. I think I'm on the sidelines, specifically till the Reliance Jio launch comes through, and for obvious reasons. I think if you look at all the data points that telecom companies have posted, whether that be ARPU, whether that be MOU, you're clearly seeing signs of compression come through. Add to that, I think, if you look at the leverage balance sheet of players like Bharti Airtel, and specifically, I think no clarity coming through in terms of how growth will come through in the African operations, that clearly creates an overhang. Even if you look at Idea, the kind of capex plans that Idea has got, I think if you look at the net debt to EBITDA levels that have inched up slowly and steadily, and all these telecom operators need to put in additional capex. Their OPEX is always high. They need to upgrade their equipments, and clearly I think even the spectrum payouts are going to take a toll on their balance sheet in terms of return ratios. Clearly I think the Reliance Jio launch is also going to have a huge impact in terms of how data plans will be poised and how data plans will be phased out. So clearly I think if you're looking at total consumption increasing for a lot of these guys, I think you're probably looking at data rates coming down, and even if you look at the RMS versus the SMS data, it's not very encouraging. So I think I'll not be tempted to go in for telecom stock, at least at this point of time.
Anyway, Eros International has some more gains today. So after the 5% uptick, another 4% in the pre-open session. Just about a minute to go before the pre-open rate settled down, and that to my mind is standing out in the Nifty 500 at least. The Nifty itself will open about 0.75% in the green if the pre-open rates are to be believed. And CAN will have this big uptick, 5% higher in trade today. So do watch out for that one. That aside, it's some of the financials which will probably do well. Mayuresh, we have the exclusive interview with Anil Agarwal coming up in the next 20 minutes. But what's your view on CAN and Vedanta, if you have one?
So clearly, Neeraj, I think the way the oil prices are panning out, the kind of realizations that one really looks from CAN India, I think they are going to be subdued. Add to that, I think they've already reduced their capex plan. So clearly, if you look at their assets currently, you look at the cash on their balance sheet, I think it becomes a very, very tempting play. But clearly, I think this stock will underperform. And clearly, even in the case of Vedanta, I think you're looking at commodity prices being subdued, at least for the next 2 to 3 quarters. So I think it's a long drawn-out play on how commodity price recovery will happen. But again, I think the cash flows will remain subdued. So again, I think staying on the sidelines for both these stocks.
Okay, time for our high price phobia segment, and today Darshan is going to throw light on TVS Sri Chakra. It's been a performing stock, expensive, yet the data point, Darshan, are indicating that this stock could be a long haul stock. It has a long way to go.
Yes, it has, and just a standard disclosure, this is for information purposes, and we are not recommending buying or selling this stock, so that you have to do after speaking to your financial advisor. Now, coming to TVS Sri Chakra, is the largest player in the 2 and the 3 wheeler segment. Currently, as far as the OEM space is concerned, that is directly with the company, it's the largest, it's number 1, that's its ranking. And as far as the aftermarket or the replacement market is concerned, it is number 3 after MRF and CEAT. Now, the play on TVS Sri Chakra is the fact that on the domestic growth as far as the 2-wheeler space is concerned, and over the past 3-4 years we have had a stupendous surge as far as 2-wheelers are concerned, and the replacement demand will kick in. Now the trigger for TVS Sri Chakra is the change in product mix. 2 years ago, only 20% of their revenues came in from the aftermarket or the replacement demand. In the latest financial results, that share has gone up to as high as 45%. And this is a high margin product. The replacement margin will be almost 200 to 300% higher than the OEM, because the OEM has a fixed contract, and the fall in rubber prices does not affect them. Now they're shifting focus to the replacement market, because the fact that rubber prices have come down, the margin will be much higher, and the the replacement tire market is growing at almost 18% over the past few years, compared to a single digit to the high 10% mark as far as the OEM market is concerned. So they are changing their mix, which is positive for the company. Rebranding. Now, if you're seeing the TV, TVS Sri Chakra has been very aggressive. You've been seeing a lot of ads as far as TVS tires is concerned, and they want to rebrand as far as the replacement tire also. So that is the strategy that the management is looking at. Expansion. Now the current capacity is 24 lakh tires per month capacity, compared to 15 for MRF and almost 12 for CEAT, and they are bringing it up to 27 lakh units by the end of the year. So the brownfield capacity expansion has been done. Debt reduction. The company had a debt of almost 200 crores as of March 2015. In the last 6 months, they've repaid almost 160 crores of debt, and they expect to be debt free by the end of the fiscal. They will have some ECBs or FCCBs that will be very minuscule, but it will be almost debt free. And finally, notable the tie-up with Michelin will give them additional 3 lakh units. Highest sales ever reported in the last fiscal, and has been a dividend paying company since 2007. So a lot of key things that you have to watch out when you're analyzing TVS Sri Chakra.
Right, Darshan, thanks a lot for that. Mayuresh, let's discuss the tire space at length. And again, the Indian tire space, Mayuresh, is very fascinating. Apollo focusing on truck radial tires. Balkrishna Industries, a specialist tire maker. TVS Sri Chakra business model is changing, and CEAT certainly has got the mojo back. So which is the best tire company to own?
So clearly, I think if you look at the underlying from a lot of managements, they have been indicating on how sluggish the top line growth has been, specifically in terms of OEM demand and the threat from Chinese imports. So at a certain point of time, if JK Tyre corrects, because it's got a leadership position, at least on the MHCV side, I think that looks a little bit attractive to us. But the best play at this point, as Darshan was explaining, is TVS Sri Chakra. I think market leadership position, as he was mentioning, in the two-wheeler and three-wheeler space. Our own take is that you will see 11 to 12% growth in terms of top line, close to that 288.5 crores odd mark, and clearly if you're looking at EBITDA margin, we are expecting that to be ranging between 15 and 16%. The obvious reactions in terms of pass-through in terms of lower raw material prices, whether that be rubber prices or the synthetic prices, actually have played out on the stock. But meaningfully, I think the capacity expansion that TVS Sri Chakra is doing, the Michelin tie-up, and again I think the focus on exports, which contributes just 11 to 12% for TVS Sri Chakra, is going to be a kicker going forward. The debt reduction that Darshan was talking about is a big value add for TVS Sri Chakra, because that reduces its interest and finance cost in a substantial manner if you do a comparison with FY15. So clearly I think valuations a tad bit on the expensive side if you compare the historical valuations, but the growth prospects for this company look tremendous. So clearly I think we're very optimistic on TVS Sri Chakra at this point of time.
Okay, Mayuresh, stay on. We'll get in your final idea post market open, but just to fill in our viewers with one key development before we get into trading ideas for the day. Don't be surprised if you're looking at the price of Jindal Stainless and worried that how did the stock fall down, because yesterday was the last day. Now the stock is trading X. So this is one part of the business. The other part of the business lists only in January, and therefore this price adjustment. We'll talk more about this post market open, but for now, a minute and a half left. So let's just talk about the top trading idea for today's session. And Sandeep Wagle, what would be your top trading call for the morning?
Did I just sell in a Can Bank, stop loss 273, target 258?
A sell call on a Canara Bank. That is Sandeep's top call. Mitesh, what about you? What is your top call for the morning?
Yeah, I will choose a buy on Marico with a stop at 412 and look at targets at 432.
All right, a minute 20 to go, and frankly, it's all about the Fed minutes. They're not magic minutes, but yes, markets, the way global markets are reacting, it means that something new has come from the Fed minutes. The Fed minutes are clearly endorsing and indicating the obvious, which is the global risk have come down. US economy is recovering. If the US economy recovers more, there is a serious case for a lift-off in the month of December. So there's nothing new about it. Why are markets celebrating? Well, the reason why markets are celebrating is because somewhere I think most of the markets were oversold, and sometimes markets, they need an excuse to move up, and they're simply moving up right now. The biggest problem for markets currently, it's not earnings, it's not the macro setup, it is not the global setup. It is the relentless selling which is coming from...
Yeah, because, sorry, but while we are at that, it's some very important news that we may want to address. That Lundin Law PC has announced ongoing investigation of Dr. Reddy's RABs, urges investors to contact the firm. And I'm reading the release which says that the investigation is related to allegations that certain statements issued by Dr. Reddy's were false and misleading concerning the company's financial performance. This is big, and let's see if Dr. Reddy's reacts to this or no. But there is a Lundin Law PC which is announcing that it is investigating the claims against Dr. Reddy's.
We'll have to understand the news. Frankly, I'm not top of it. Lundin Law PC reports, I really need to understand this one, so I'm not going to speculate on this one. Let the news settle down. We'll try and get more details. 52 points is what you've taken, what you've gained on the Nifty right now, and you got 170 points up on the Sensex. So benchmark indices, both of them are off to a good start, and this is again on expected lines, in line with what the broader market setup was. Let's first address some of the newsmakers, and I will start with Dr. Reddy. We just reported that flash. Is the market reaction evident on Dr. Reddy? Well, not as much. 3,400 rupees for Dr. Reddy, up 33 rupees. Some more stocks which are in news. Let's start actually with some of the high flyers like Maruti, Bajaj Auto, some of the high flyers which really have contributed and which have been outperformers. Maruti on your screen, Bajaj Auto 2376. Now let's look at some private banks, because private banks of late have been ranked underperformer. They've taken it on the chin, starting from ICICI Bank to HDFC Bank and what is going on with the IndusInd Bank. So markets are off to a stable start. That's largely a function of IT and pharma, and both these groups are looking strong right now. Interglobe Aviation, what is the first rate there? Interglobe Aviation right now, it's been a ranked outperformer, and irrespective of the market move, it is now sitting at a record high, 1065, 1066 rupees for Interglobe Aviation. In last 2 days, the aviation stocks have been slightly volatile, but that's one active group, so to speak. So Interglobe Aviation or Indigo off to a great start, SpiceJet off to a flat start, and the first rates on Jet Airways are also indicating that it could well be a decent day of trade for Jet Airways. That's one part of the one end of the market which is looking extremely charged up. Coal India, well, the suspense factor is gone now. Will government sell their stake in Coal India? If they do, it's an overhang, but frankly, approval does not mean that a stake sale is imminent. 335 rupees for Coal India. Sun Pharma, in order to save tax, they are planning to invest in the wind energy business. Is that unnecessary diversification? 757 rupees for Sun Pharma. For the moment, the stock is up by about 5 rupees.
Couple of other stocks which could be in focus. I want to see what Reliance and Cairn are up to, considering the government has now fixed a maximum marketing margin for natural gas. This may not really augur well for the sentiment on RIL or, for that matter, Cairn. The government is also looking to compensate road developers in case of delays. So look out for a couple of companies, the likes of Ashoka Buildcon, Sadbhav Engineering. They may actually, hold out in trade. Hero MotoCorp, they've managed to sold over 10 lakh units during the festive period. The management just came out and gave their official figure. Hero MotoCorp is holding out smartly. My sense is Maruti M&M also should be holding out pretty okay in today's trade. M&M, they're looking to ramp up the TUV 300 production to now 6,000 units. And M&M is just about mildly positive in the green. Tata Steel's investment on its Kalinganagar plant may actually touch about 1 lakh crore rupees, so look out for this one as well. You also have Aurobindo Pharma, which has sought shareholders okay to raise about $600 million. Look out for this one as well. That could very well be in focus. Just want to highlight some of the liquid universe movers from yesterday and the laggards yesterday, the likes of Bharat Forge, BEML, Hexaware. I want to see what Infosys is up to, considering this was such a big drag yesterday. Ever since the management has come out and talked about a weakish Q3, you've not quite seen any recovery or green on the stock. Finally, after many days, 1026, a positive tick coming in on Infi after being a big drag to the tune of about almost 3.5% yesterday. Hexaware as well was a big loser, so I just want to see what the IT index, Nifty IT, the new name for this one, is up to right now. And I want to see what the Nifty Bank as well is doing and whether or not it is seeing any positive start. That's the IT index holding up by 0.6%. Bank Nifty, just about 80 odd points. Considering this shaved off 350, this is not really a big bang move to start off the day. Having said that, while we may have started off above the 7750 mark, it's just a 45 odd point move, so it's not a very big bang rara sort of start. Much like the rest of the globe, this seems to be on shaky wicket.
Small caps though doing okay, 1% higher, while the large caps may not be. 2 or 3 names which stand out. Philips Carbon Black is up 6.5%. Remember, anti-dumping duty on carbon black. So while it may benefit tire companies, I'm sure it benefits Philips Carbon Black as well, at least sentimentally, if not fundamentally. Will come up on your screen. Philips Carbon Black, it's at 130, up 6.5% in trade. So good going for that stock. There is strength in Amtech Auto on that news bit about how they may get some lot of money, or 6,000 odd crores, whatever, over the course of the 6, 9, 12 months, if they indeed manage to sell Tech 4. So Amtech Auto is in focus. And somehow, I don't know if the world is using more contraceptives, but Cupid, another 11.5%. The management will be joining us a bit later on the channel at about 12 o'clock or 12:15. But that's a fresh life high for Cupid, 409 and counting. So good going there. But I think the standout news-based mover is Philips Carbon, which is up 6.5%. I don't know if the tire companies are moving around or not. Should come up, the likes of Seat, MRF, etc. They would tend to probably benefit a little as well, because the domestic cost of manufacturing rubber might just go down a bit. Last but not the least, bring up Dr. Reddy's once again. and just see if indeed this news bit is having an impact. It started off in the green, now marginally in the red. And actually even GAIL, we just did an ET Now analysis. We spoke to analysts as well, and GAIL never charged higher marketing margins. Reliance did. So GAIL does not necessarily lose out because of this marketing margin cap that is coming, because we never charged high marketing margin in the first place. So GAIL will not be losing out. Keep that in mind if you're trading GAIL.
Autos is a powerful group. So whether it's MRF or Eicher Motors or Bosch, or for that matter Maruti Suzuki, there is definitely a huge amount of tailwind which is there in the entire auto sector. Rates are coming down. Festival season demand is not bad. That is one space where I think both in terms of macro, in terms of the commodity cut, and also in terms of a general participation, auto is one powerful group which continues to be a stable group. And not only domestic auto company stocks like Tata Motor, DVR also, they've done rather well right now. Yuresh, for the longest time we've argued that Maruti is expensive. Maruti is trading at a huge premium to global auto companies like a Toyota or what a GM is doing. Yet it is the most favored stock for foreign institutional investors. Do you think the honeymoon period in Maruti is getting over, or this is here to stay?
So clearly, Nikunj, I think the premiumizations for Maruti, in my opinion, would continue at least for the next 2 to 3 years, based on the premise that the product mix has been extremely good. Secondly, I think if you look at their market share, I think they've not lost market share at all over the last few years. And secondly, I think with a good mix coming through, with Baleno actually having a good response, our take is that the product mix should continue at healthier levels. Third, I think the kind of a healthy balance sheet that Maruti has got aids its earnings expansion. And again, clearly, if you look at the kind of optimization programs that Maruti is going through, I think clearly that aids the earnings momentum. So clearly, I think our own take is a good product mix, healthy balance sheet, earnings growth expected to drive balance sheet growth in excess of 39-40% over the next couple of years. The EPS estimates that we've got of 225 rupees should sustain. So clearly, I think we still remain optimistic on Maruti Suzuki. And specifically from an Indian context, I think if you're looking at the 7th pay commission probably coming through, you're probably looking at entry-level cars with the semi-urban, urban consumption going up. I think Maruti should also benefit a tad bit from that angle as well.
Mark, Dr. Reddy is reacting to that Lundin story. Now, we don't have the details. It would be unfair on our part to really get into implications of that. So we'll try and get more details about the firm and what exactly they are planning. Why are they mulling a class action suit against Dr. Reddy? But the markets are nervous, and markets are clearly nervous about wherever they think there could be a mismatch, there could be a bit of a financial irregularity. There is zero tolerance for anything like this. And the case in point here is that what's happened to Eros. One foreign firm raises a concern about accounting standard and huge crash happened to Eros. It moved from 600 rupees to sub 300 rupees.
Yeah.
And the stock reaction in Dr. Reddy, it has just taken a U-turn from the day's high. We don't have the details. We will not like to speculate what it means. We are simply putting the facts out, and the facts are indicating that there is a firm, a US firm, which is making a claim that Dr. Reddy has misreported the financial numbers.
I was just looking at the internet. Lundin Law apparently has filed class action lawsuits and ongoing investigations against a bunch of companies in the last 1 month alone. So 6 days ago, 5 days ago, there are some lawsuits and ongoing investigations against Amicus Therapeutics, Global Technologies, Bofall Holdings, and a lot of other companies. So they probably do this every now and then. But yes, just take on board Nikunj's point that we do not know what Lundin Law exactly does or how big or serious these allegations might be. But maybe the market is nervous, 2.5%, which is why I think a trade might be an interesting one. We can't probably give a fundamental call on this one. But Sandeep Wagle, very quickly at 3295 on a Dr. Reddy's, for an active trader, is it a good level to go short on?
Yes, if you can add on in case it bounces back. I don't see Dr. Reddy go beyond 3360. That would be a stop loss. And once it breaks down out of 32, the prior swing low of 3260, I think a bigger move will follow. And that could be even testing of 3000. So yes, I would short it now and add on in case there is a bounce back for a target of 3000 or maybe even sub 3000.
What has reversed today, and that is sugar. across the board, sugar stocks have reversed. Sri Renuka Sugar is the top traded counter, at least on National Stock Exchange. But today sugar stocks are down. Ouch. 7% off for Balrampur Chini. Sri Renuka Sugar 6%. We'll look at more names. Bajaj Hindustan 3.5%. Triveni Engineering 4.5%. This is simple profit booking, folks. Sugar stocks have seen an extraordinary run up. Some fundamental, some speculative, and some largely momentum. And today is one of those days of profit booking, which, by the way, has coincided with strength in global markets.
Okay, Mayuresh, they say you should buy some good pockets if there are temporary pockets of weakness. Will this be a temporary pocket of weakness in sugar, or do you think they've priced in almost all the benefits for the near term, the next 6 to 9 months?
Probably, I think they have, Neeraj. And again, if you look at the kind of price increases in terms of raw sugar realization, specifically in the Indian context, that have inched up sharply. And again, I think I fail to understand, because if you look at the carryover inventory of the last sugar season, it was close to 9 to 10 odd million tons. If you add the production numbers, which are expected to be lower this year, and even if you assume that the demand actually is in sync with what production is, you're still going to have an excess carryover inventory, even if you take over the mandatory 4 million tons of exports that the government is mulling up. So for the sugar season, probably for this fiscal again, I think you're still seeing excessive supplies both on the Indian context as well as the Brazilian context. And clearly, I think the price increases that we're probably seeing, whether that was for festive reasons or otherwise, I think I do not see that to be tenable, at least from a medium to long term perspective. It obviously moves in cycles, Neeraj. So a sugar cycle moves typically in a 2-3 year fashion. Probably that sugar cycle should have started in favor of sugar companies this year, but because of the excess capacity that we carried over from previous years, you're probably looking at the cycle getting delayed by 1 more year. Clearly, even in terms of the arrears that is due, the government policy that got announced at 4.5 rupees per quintal yesterday, I think a tad bit positive in terms of improvement in cash flow, because direct subsidy payouts will happen to the farmers. But clearly, I think that does not improve the cash flows. And if you go by the Q1 numbers of a lot of companies, whether that be UP based, South based, the interest cover ratios are not encouraging at all. So I mean, I'll not be tempted to buy sugar companies at this juncture probably. I think I'll just wait for a couple of quarters, wait for the sugar cycle to turn before I take a call.
Yeah, considering the reversal that we're already seeing in sugar. Mayuresh, always good chatting with you. Thanks much for taking the time out and speaking with us. Take a look at what the market though is up to. We are holding comfortably above the 77.50 mark. So at least so far you're not quite seeing any sign of well, this uptick getting sold into, but who knows, maybe, just maybe we're on skittish